Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris milling wheat, Minneapolis wheat, and London UK feed wheat. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, Paris milling wheat. Much like Chicago and Kansas City wheat, one single pattern has been the cause of rising prices here seen throughout July, a pattern I highlighted a few weeks ago. A dark blue mid-May to early July based diamond bottom pattern. The move up easily reached its primary target and harder to reach secondary targets topside. A week after we closed outside this pattern, we had a strong gapping move higher through the green short medium moving average, currently 219 3/4, and a 50% Fibonacci line, the important 50% absolute Fibonacci line at 218 3/4, and the March to May 24 move at 230 1/4. The market started slowing after pushing through the combination of the previously drawn bright red upper time, currently at 248 1/4, and the purple neckline extension, currently 244 1/4, of the June to November 23 head and shoulders top. Prices breached these, but turned lower with an unusual and very large combined bearish long engulfing pattern, and key reversal down. The move lower pierced through the 50% Fibonacci line at 230.5, but halted most of the week before last just above the bright red middle time, currently at 233 even, before 2 Fridays ago punching down through it, and halting, unsurprisingly, at the 50% Fibonacci line of the core recent June to July move at 227 1/4. We've been held up over this most of last week. Now, 2 weeks ago, I spoke about supports below, and I'm afraid it is a long piece, and I quote, "The first levels I would look to see some supporting forming, though I'd also keep an eye on the 50% Fibonacci line at 227 1/4 of the new recent late June to July 26 move, and especially close eye on the gap left behind down below between 223 1/4 to 224.5. Now, one more thing to say to deal with this rise is what is called a vertical run-up pattern. In such a move as we have seen, about 2 out of 10 times we see a further continuation higher, though not as swiftly. Most of the time, 8 out of 10 times, we see a retracement of some or all of the run-up. A rough median is about half the move up is retraced, with about 2 out of 10 times seeing a full retracement. However, the retracement is usually short-lived. Rough guide is about a month or so. The only exception is those that have seen a further continuation move higher, where it becomes problematic. This is worth considering here in this situation, also in the other grain markets as well." End of quote. These comments still stand, but I added one other observation last week, and I quote, "It concerns the market's actions over mid to end of July. You see, elsewhere in the grains, prices have formed sometimes a small, irregular head and shoulders top. However, this pattern is not so clear here, and indeed could be argued that it does not exist. So I'll be not setting up on my daily chart here." End of quote. Now, this observation still stands, but I would also add a further observation this week, that where in other grain markets we have seen a quite steep descending wedge pattern, here there is no opportunity to draw one. So no head and shoulders top and no descending wedge pattern here right now. But it does not mean that prices will not be or may not be influenced by these patterns seen elsewhere. Just keep your eyes on some of the other grain markets, as their actions may be reflected here with or without a pattern. Minneapolis wheat. Much like Chicago, Kansas City, and even Paris wheat, there's one single pattern that's been the cause of the rising prices seen here throughout July. A pattern I highlighted a few weeks ago. It is not a diamond pattern here, no. It is instead a mid-June to mid-July based V bottom, a pattern I highlighted early July after a break higher from an earlier late May to early July bear channel. The resultant gapping move up from this bullish pattern pushed up through the mauve medium moving average, currently at 675 even, the green short medium moving average, currently 672 3/4, the 50% Fibonacci lines of the May to August 24 move, at 669.5. A number of highs and lows, notably the high seen back in May, which is in a congestion area between 723 and 3/4 to 737, admittedly sparsely populated compared to what prices moved up through, but still a significant top at 735.5 and close to the June 21 high at 743 and 3/4 to finally slow down at the August 2017 high at 753.5. And before the congestion between 768 and 3/4 to 778 1/4, containing the July 2021 high at 778 1/4. The recent actions allowed me 3 weeks ago to draw a new pattern, a bright red mid-January to mid-June bullish Andrews pitchfork. The action late 2 weeks ago was that of a combined key reversal down and bearish below the stomach pattern. Last week I've seen some stabilization of congestion between 723 and 3/4 to 727.5. However, last Friday, the market punched down through this congestion. We entered a zone with a number of interesting supports below, which I detailed 2 weeks ago in a long piece, and I quote, notably between 701.25 to 708, as well as the bright red middle time, currently 707.5. Then the new 50% Fibonacci line, the late June to late July move at 681 3/4, before we reach the July gap between 662.5 to 677 1/4. This is the really interesting one below. It not only contains right now the green short medium moving average and the mauve medium moving average, but also the earlier mentioned 50% Fibonacci lines, and should be cumbersome to deal with if we do get down that far. Now, one more thing to say to deal with this rise, as what is called a vertical run-up pattern. Such a move up as we have seen, about 2 out of 10 times we see a further continuation higher, though not as swiftly. Most of the time, 8 out of 10 times we see a retracement of some or all of the run up. A rough medium is about half the move up is retraced, with about 2 out of 10 times seeing a full retracement. However, the retracement is usually short-lived. A rough guide is about a month or so. The only exception is those that have seen a further continuation move higher, where it becomes problematic. This is worth considering here in this situation, also in the other grain markets as well. End of quote. And these comments still stand, and I added one further observation last week, and I quote, it concerns the market's action over mid-end of July. You see, elsewhere in the grains, prices have formed sometimes a small irregular head and shoulders top pattern. However, this pattern is not so clear here, and indeed could be argued it does not exist. So I will not be setting it up on my daily chart here. I still stand by this, and that's the end of quote. I still stand by this as well, but I would add a further observation that though we may not have a head and shoulders top here over July, we have instead, or we do have instead, if a little ragged, a possible quite steep dark blue descending wedge pattern. Now, it looks like it's been breached on the lower bull channel, the dark blue lower trend line last Thursday and dark blue upper trend line today. But it needs more than just one session to confirm such a move. However, whilst I cannot give targets just yet, I can instead give some potentials. Thus, for a confirmed break lower below the dark blue lower trend line, we'd have a primary potential about minus 19 3/4 cents below the dark blue lower trend line, and a secondary harder to reach potential of minus 68 cents below the dark blue lower trend line. Conversely, for a confirmed break higher above the dark blue upper trend line, we would have a primary potential of plus 42 1/4 cents above the dark blue upper trend line, and a secondary harder to reach potential of plus 68 cents above the dark blue upper trend line. I may finesse these numbers as the picture becomes clearer, and my only concern is that this descending wedge pattern may turn into a bear channel pattern. London UK feed week. As I've repeated here for months and months, there are two key long-term patterns here to bear in mind, with a common neckline extension, and that's currently at 169.45. Now, I've detailed these patterns in the past, but we are now sufficiently far away from the common neckline that will now suspend discussion of these for now, or at least until prices start coming back down there again, should they do so. In the more recent action, much like Chicago, Kansas City, Minneapolis, and even Paris wheat, there is one single pattern that's been the cause of the rising prices seen here throughout July. A pattern I highlighted a few weeks ago. It's not a diamond pattern here. No diamond. Instead, it is a small double bottom, formed over June and early July, which still managed to keep within the core pattern here, which is a really good core pattern, as well as I will demonstrate on this daily chart. And that is the purple end of June to late October 2025 bullish shift pitchfork, with prices racing up to be halted by a horn top last week, or the week before last. The second horn made up at the end of the week, 2 weeks ago, being a somewhat unusual and dramatic long key reversal down, as well as an unusual and dramatic bearish engulfing pattern, capped by the purple upper tie, currently 210.20. The recent action saw a gapping move up with change over the rising mode medium moving average, currently 182.65, the significant 50% absolute Fibonacci line at 180.5, the green short medium moving average, currently at 184.55, as well as a number of times, and a bright red head and shoulders neckline for the March to May 2022 head and shoulders top, currently 192.55, with prices peaking just over the 2022 low at 206.5. This leads me to my final points I drew 3 weeks ago, and they have a common thread. 3 weeks ago, patterns based on the same period, a bright pink, late December 25 to late June bullish Andrews pitchfork. The bright pink upper tie currently at 195.85. I have no doubt assisted the purple upper tie in capping prices 2 weeks ago. Both of these, the bright pink and purple upper tines, are very satisfying to me. 2 weeks ago, the big key reversal down come bearish engulfing pattern finished closing just above the August 2021 high at 199.20. This was the first support underneath the market, and we have been testing and pressing this all last week and the previous week. During this time, the market created here not a head and shoulders top pattern or a descending wedge pattern as we have seen on some of the other grain markets, but instead a descending triangle pattern, highlighted in bright pink, currently 194.80 to 197.95. We haven't as yet broken out of this pattern, though we did close just above the upper bright pink downtrend on Friday. So this is a breach, not a break yet, but a breach of this pattern. So at the moment, I cannot give targets, but I can give some potentials. Thus, for a confirmed break lower, below the bright pink lower trend line, we would have a primary potential about minus £6.75 below the bright pink lower trend line, and a secondary hard to reach potential of minus £13.50 below the bright pink lower trend line. Conversely, for a confirmed break higher above the bright pink upper trend line, we would have a primary potential of plus £8.65 above the bright pink upper trend line, and a secondary hard to reach potential of plus £13.50 above the bright green upper trend line. Bright pink upper trend line, I should say. I may finesse these as the picture becomes clearer, just in case. What do we have in the way below? Well, we still have congestion of the bright red neckline and the bright pink middle tine, though this latter one is being somewhat tested last week. And maybe, last week it was being tested. And then there is the 50% Fibonacci line of the very recent June to July 26 move, which is at 89.10. However, I think better support exists below the first gap, which is between 188.75 to 189.75, where the purple middle tine, currently at 188.65, and the bright green April to May small head and shoulders neckline lives, and that one's currently at 187.95. If prices drop below that, well, it becomes very interesting. Now, I'd like to repeat something which I said 2 weeks ago, as well as think it's still very valid, and I quote, "It is to deal with this rise as what is called a vertical run-up pattern. Such a move up as we have seen about 2 out of 10 times, we see a further continuation higher, though not as swiftly. Most of the time, 8 out of 10 times, we see a retracement of some or all of the run up. A rough medium is about half the move up is retraced, with about 2 out of 10 times seeing a full retracement. However, the retracement is usually short-lived. A rough guide is about a month or so. The only exception is those that have seen a further continuation move higher, where it becomes problematic. This is worth considering here in this situation, and also in the other grain markets as well. End of quote. These comments still stand, and I would like to include some further comments I made last week, and I quote, "Concerns the market actions over mid to end of July. You see elsewhere in the grains, prices have formed sometimes a small irregular head and shoulders top pattern. Here it is a very, very irregular and unclear. But if you regard last week's actions as a horn top as the head, and this week's actions as a pipe top as the right shoulder, as you look at the pattern, then perhaps you can see it. What is interesting is that today's low and low close is right on the dark blue neckline, which is currently 197.95 for this small irregular head and shoulders top pattern. So far we have not broken the neckline, so I cannot in truth lay out any targets below. However, just in case a break lower should happen before I speak, here are some potentials for such a move down from a head and shoulders top pattern. Thus, a primary potential would be minus £6.90 under a confirmed break of the dark blue neckline, and a secondary hard to reach potential would be minus £13.50 under a confirmed break of the dark blue neckline. And now wait and see if this head and shoulders top becomes a reality. End of quote. Now, last week we still haven't broken the neckline, so these potentials earlier still stand as potentials, though the pattern itself is being tested right now. Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpick and ADM Investor Services International Limited. And here comes the final important bit.